so just a little bit more about depreciation before we move on to the next part of this. Well, there's important things to note, of course, like contra accounts, like these temporary accounts that kind of hold value. But contra account, like a very common contra account, accumulated depreciation is a contra account. It's a contra asset account. So like, what that pretty much means, like, let's say, like, okay, so you guys had like a journal entry. Okay. You guys purchased like this equipment, right, for $100,000, and you paid with cash. Well, at the end of the year, you would pretty much have like this thing, like this depreciation equipment, right? And then yeah, so like you would debit the depreciation expense. Like so. So you debit, let's say, for whatever amount, like 5,000, okay? And then the accumulated depreciation would be credited for that amount. And then like year 2, year 3, at the end of year 3, right? Like let's say there's the same amount of depreciation, 5,000. So you guys see how like the depreciation accumulates over year. Okay. So like the whole point of this is that when you guys write this into the balance sheet, this temporary accumulated depreciation contra asset account would be zeroed out. And then I'm not sure if it's taken out of owner's equity or net income, but that's just like an example of like this contra account. So like another important thing is like depletion. Okay. Like depletion, as well as amortization. So like amortization is like a different word of saying like depreciation, except it's like for intangible assets. So like intangible assets could include things such as like patents, copyright, and there's another one that's really common. What is it? Let's see. Goodwill is another thing that can be amortized. like amortization. So it's not as common. It's amortization for like these non-tangible assets. You're gonna mostly like straight line. So like this amortization, it's basically like depreciation for non-tangible assets. Okay. And is there accumulated amortization? I guess there is accumulated amortization. But one of the things is related to the depletion rate, cost of the resource divided by the estimated total of resource. Right. So like depletion is like, for example, if there's like a resource that can be depleted. So like let's say like there was like iron mine with like 1 million tons of iron, and like the cost of this, like the book value of which it was purchased, is like $1 million, or like let's say it's like $200,000. So like the depletion rate, you can see the depletion rate is cost of resource divided by the estimated total units of resource. So 200,000 is the cost divided by a million. So the depletion rate is 20 cents. Depletion expense is like that depletion rate times like how much was removed. So like let's say they mined out like 200,000 tons, right? They mined out 200,000 tons. Right, so like that means that they have depleted. The depletion expense would be, well, 40,000 of the 200,000, right? So like you guys can put in like, for example, if you guys look here, the depletion expense, and then like the accumulated depletion as well. That's pretty much it in regards to like depletion, straight line, double declining, units of activity, amortization, intangible assets, like how intangible assets are depreciated, like the types of intangible assets, like what kind of assets are even depleted, like fixed assets, long-term assets, as well as like depletion of natural resources.